I mean, even during this flash crash, I mean, we had a lot of curvature left. It wasn't hurting us that much when that happened, even though it passed our butterfly. Okay, it could hardly do anything that day anyway. I tried to buy Apple around 200, in a blink of an eye, it was 240. So anyway, I was able to do some good stuff in currencies that day for my private account. Let's see, what page was I on? Okay. So let me zoom out because I get a little lost when I'm too zoomed in. And all right, so we were here. So this is showing, all right, so and it was so it was supporting, it was coming down to this mid-channel on this 2-year chart, and it was coming on this tilted chart, also touching the wick zone on that May 24th. So I had 3 reasons to say, okay, I got 3 votes, let's do something. So here's what I did. So this is May 24th. This is in the planning stage. And what I'm planning is to buy a call vertical to help babysit or take some profits or benefit from a bounce. And I'm selling off some put spreads at the lower end as well, which has in a way of harvesting some butterflies or adding depending on how it's done. So here's the graphic of before and after. This is in the planning stage. In this rows 21 and 22, I'm going to blow it up here. You could see the simulated what ifs. What if we buy the call spread? And in simulation 2, what if we sell the put spread? And it's showing them separately and merged, and the red is the one to really look at because it's got both verticals built in. And the magenta would be the result of it all. So if you look here, what we're doing, look at the green line. That's our potential risk. That's what we started with before this trade. This is where we were after we just had the 10-lot babysitting only, the 30-lot. But we've reduced our margin. In fact, we could lose more on the downside now than the upside. But the flash crash kind of put in some support there. And we disappeared from those prices and left a tail there. So this is the decision I made. Okay? And you know, we'll have a forum afterwards, and you can visit riskdoctor.com and have more discussions following this discussion. Anything we don't cover today, we can catch up with in perpetuity. We can do it in our forums. It's free to join. Okay, and I'll set up something for this presentation in there. All right, let's go to the next one. 25. So, all right, so here is the butterfly dissections, and I'm showing it a little bit differently here, just to show you the versatility of how this, the strength, the beautiful features of this software. It's amazing. Okay. Okay, so now when I dissected, I took out 20 butterflies here and 20 there at 460 and 470, then 50 and 50, then 40, then 30, 30, 30, 30, 30. And for some of you who know, when you have 2 butterflies in a row, like the 220 lots, that's a condor. And when you have 250 lots, that's a condor. And when you have 530 lots, that's a stretched out condor, right? But this is what it looks like. The leftover is a bull spread or an out-of-the-money put spread short. So let's see where our inventory is. It's wow. Wow, 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 wowie. Okay, this is a lot of stuff. All right, so we're up $9,700. But look at all our butterflies. My God, we have $25,000 in butterflies. Okay, that's a drop in the bucket for Bill Gates. It's like he doesn't have any butterflies on. But to some of us, that's, wow, I got too many butterflies on. So we have 330. So I'm going to look to start paring that down. I know they haven't really blossomed more than with this volatility that has exploded here. The butterflies at the money, the at the money one's 92 cents. They're still relatively cheap. And incidentally, you know, Google the other day, July expiration, you know, Google has its earnings the day of expiration. So July and October and January and April, It always has a, so like the day before, either the butterflies are really expensive and you know it's not going to move, or they're really cheap and you know it's going to move. But so like last July, I mean just last week, you know, you could buy a butterfly at the money for $1.50 in Google, and it went out worthless because Google went $26 on the opening. Anyway, so you know, sometimes you take the money when you can get it, right? But you can see the consciousness behind it. I'm trying to pay for by selling something. So where's all my money? Well, you got 10 grand tied up in this the money stretched out condor. That's the lion's share of it. You got the second amount of money in this 50 lot condor at 480, 490. For those of you who don't yet get it, it's the 470, 480, 490, 500 condor 50 times. Here's the picture of it down here. The 50 lot is this blue graph. The 30 lot stretched out one is this red graph. The 20 lot condor is this white graph. And the bull spread, this credit spread, is the yellow. And this 40 lot baby butterfly at the 500 strike is in purple here. All right? And it shows you where all the money is. And that credit spread, by the way, is valued at $3,500. So we're short a spread that's $3,500 that could go to $10,000. So we're risking on that $3,500. I'm sorry, $6,500 to make $3,500, basically. All right. So that's the most we can lose. So as far as rate of return, it's been dropping. Right. I mean, I'm sorry, the capital at risk has been dropping. So our rate of return is much greater than what was eventually, you know, stated in the end. And in the beginning, where you could take more risk because there's more curvature, these verticals and condors, they don't move as quickly. So even if they go way past you like that flash crash did, it's hardly hurting you. It's hardly hurting you. Okay, so monitoring now, we're getting that was baby butterflies, right? So how am I looking at it? So here I've broken it apart, and I'm not looking at it as a short put spread. I'm looking at it as a long out of money call spread that's going for $1,100, and I'm looking at these potential pieces of inventory. In the first line, you have a big stretched out condor that goes from, it's saying with the bodies 470 to 560. In actuality, the wings are 460 and 570. So the top row, the $11,315 worth on the left side here, is evaluating a condor that starts at 460, and the wing is 570 on the upside, but the bodies or the flat top ends between 470 and 560. And SD1 in color is this red one, and you can see it's kind of hidden here, but it's showing you that the wind zone is to, oh, actually, sorry, I made a mistake. This is spread dissection. So what I said, the wings are 460 and 570, that's wrong. It's what you see is what you get in spread dissection. So it's 470 is the wing and 560 is the wing, and you can see that the body, the flat top, is between 480, and 550. So the chart is lining up with the strikes. The next one is another big condor. There's 14,199 tied up in spread number 2 that I could, if I'm looking to take off some money off the table, there's a lot of money there. You remember we had $28,000 in butterflies, or $24,000? I could take off $14,000 of them right there with that one trade.